and it doesn't really come as a surprise considering the disruption in the global economy since the beginning of February. But I think it will probably draw to some earnings revision for HSBC, especially they quite upfront and say that it totally changed the outlook for the bank for the year. So I'm expecting to see more downgrade in the consensus for HSBC for this year and next.
It's interesting that the bank has also spoken about the plunge that we've seen in oil prices as well as a reason that it is taking this hefty impairment charge as well, the credit impairment charge up to $3 billion. And in fact, it says a significant charge related to a corporate exposure in Singapore with respect to oil behind that. What do you think about that?
Yeah, I think so. Yeah, I guess so. We know which this exposure it is, and to some extent, so it's not surprising because HSBC is one of the leading franchise in terms of trade finance, so between Asia and Europe, America, and the rest of the world. So I think that particular exposure also is relatively okay as percentage of the CET1. I think it's only 0.5% of the CET1 ratio. But I think also the matter most important is that the outlook, especially in credit cost, this is something between $7 to $11 billion of ECL, so that's the provision for credit loss for the year, which will be significantly impact the profitability of the bank. In fact, I think only 4.7% return on tangible equity, which I think is one of the lowest quarter in terms of profitability for HSBC over the last decade.
What about on the dividend side of things? We know that looks like it will be suspended until the end of 2020. The bank's saying it will not make a quarterly or interim dividend payments with respect to, of course, ordinary shares. It will review its dividend policy at or at the end of its year-end results 2020. Does it all hinge on what authorities like the Bank of England essentially tell the financials about whether or not they can restart and resume dividend payments?
Yeah, precisely. The Bank of England has been very clear that nothing gets decided on the dividend at least until probably October 2020. So probably it would have been very political tricky for HSBC to commit to a dividend for the year, just because one, so they don't know how the year is going to shape up, so they really quite upfront in saying that there could be a material lowering the profitability, and B, because October is still quite distant for now, so a lot of things can change. But the only thing also which matters is the dividend is quite critical for the investment case in HSBC shares. So I expect the bank also will try to do whatever it takes eventually to have this dividend reinstating as soon as permissible. But of course, they need to win over the Bank of England.